here we go again. I'm back from my holiday and sorry for the silence, but I needed a little bit of switch off. Of course, I've been on the Discord server and was communicating with my team and with my members continuously, but I'm back in full time and we can take care of all the macro data and something else today. Because despite that Russians nowadays shooting each other instead of shooting someone else, we see significant changes, perhaps some of the signs, both in the crypto market and the stock market. But before we go into that, let's see what's going on with the macroeconomic side. We start the week with an uneventful Monday from at least the macro perspective. In terms of the euro, only one data point is worth mentioning, which is the German IFO business climate that reflects the condition of the German economy. Upon its release, it is possible that we may experience an increased volume in the trading of euro. But on Tuesday, there are several things to watch. Canadian CPI, Consumer Price Index figures, will be released at 2:30 p.m. Central European Time. By the way, all the time I'm mentioning is in Central European Time. Please don't forget that. This data serves as a measure of Canadian inflation, which has shown a downward trend recently. Therefore, it will be important to pay attention to the reaction of the Canadian dollar. In the afternoon, the measurement of the durable goods orders from the United States will be announced. This is valuable information for assessing the health of the manufacturing industry, and it includes core data, which excludes the production of transportation goods such as airplanes and automobiles, focusing on other segments of the economy. This data will also be released at 2:30 p.m. Central European Time. It will be followed by the CB Consumer Confidence from the United States at 4 p.m. This is a significant indicator that reveals the level of trust in the financial system in the United States and its influence on consumer spending. When this data are released, there are usually significant movements expected in the US dollar, specifically on the DXY chart, which is the index of the US dollar. However, in the current context of deepening economic problems, it is a critically important signal. Finally, there are two more noteworthy data releases from the same region at 4 p.m. One is the new home sales, which measures the number of sales of newly constructed homes, and the other is the Richmond Manufacturing Index, indicating a health of an important production region that has not shown promising prospects in the manufacturing industry recently. But there is always another day, and on Wednesday, early in the morning, the Australian inflation data will be released under the name CPI, which is a Consumer Price Index, a term most of you are already familiar with it. It is not only important because of the Australian dollar and the Australian economic production, but also because they were among the first to suspend interest rate hikes, and the CPI immediately jumped higher, serving as an indicator of what can be expected in, for example, the United States. At 10 a.m., the M3 money supply from the Eurozone will be released. This shows the amount of money in circulation in the European economy. This is the data that will increase if there is money printing and will not increase if there isn't. And currently, there isn't. Additionally, noteworthy for measuring the state of the European economy and the level of spending is the private loans data, which indicates the extent of borrowing in the private sector. Finally, I'd like to highlight the crude oil inventories from the United States, which will be released at 4:30 p.m. again Central European Time, and this measures the change in the quantity of oil intended for commercial trade. In the midst of the oil crisis, what we are following in our website continuously, this information is particularly critical, especially the conclusions drawn from the data on the Pro Discord server. And now here is the big one. On Thursday, one of the most important inflation forecasts for the euro will be released, the German prelim CPI. This will certainly have an impact on the movement of the euro, but it's also important to pay attention to the comparison with the US data, as the central banks of the two regions have started to think differently about the fight against inflation. The British M4 money supply will also be released, providing data on the amount of money circulating in the economy. Many of our followers are from the UK, so it's important for you to know how this data is changing, especially considering the UK's particularly challenging economic situation and the most recent 50 basis point rate hikes. Additionally, this may also have an impact on the British pound. The afternoon will be dominated by the United States. Final GDP data will be released, significantly affecting the chart of the US dollar, along with the unemployment claims, which measures the number of people filing unemployment benefits. This will be followed by the final GDP price index, which measures the price changes of all goods and services that make up the GDP. For those interested in drawing conclusions from macroeconomic data, this day is a true feast, providing a wealth of information that can be used to infer changes in the stock market prices, particularly in the long term. It's a topic that interests many people the most, so it's worth studying it. And here it comes, the last trading day, early Friday morning. We will receive Chinese manufacturing and non-manufacturing, which is mostly services PMI data. I have previously emphasized the importance of these related changes, as we know they are significant indicators. Additionally, we will see the final GDP from the United Kingdom. We will closely follow the event. The CPI flash estimate, which is the aggregated inflation forecast for the European Union and can have a significant impact on the daily movement of the euro. Core data will also be released from this, and in the afternoon we have Canadian GDP followed by the US Core PCE price index. This is a core data point that ignores changes in food and energy prices, allowing for focus on other sectors of the economy. It's a very similar data point to the CPI, but the difference is that it measures price changes derived from individual consumption, and it is one of the Fed's most favorite measurement tool. Therefore, it's one of the many data points from which we can infer the Fed's next move. And now let's see what interesting thing is going on the crypto market. We now know that Hong Kong is about to open, or it's opened already. In the meantime, the European Union is here with the MiCA, and the United States is lagging behind. But this is exactly what we were looking for. And we have a very, very useful tool, which is a volume tool, but it's special calculating behind. What we are measuring is the volume in each sectors, and the sectors what we are really watching it are the weak assets, the strong assets, Hong Kong trading, and Hong Kong linked project. And as we see, the last week was a significant jump in trading volume. The Hong Kong linked project were leading the whole week together with Hong Kong trading, and the usual strong assets and the weak assets were pretty behind these two. Of course, there is a weekend, and now we see the weak assets getting a little bit stronger, which is a good news, by the way. But most probably next week, starting with Monday, we will see the same picture. And if it is, then we can identify trading volume from the European Union and Hong Kong is already probably bigger than the volume came from the United States in the last couple of months, as we can see. So good news all over, and therefore the Bitcoin chart showing a significant jump. As we saw, there were a bullish flag here, and with avoiding the death cross and closing the cycle at 17th of June, we opened the new cycle with an incredible power, and the price arrived all the way up to 30,954, which is a resistant level, but we already have a new higher high. The zone itself is very strong. Technically, the last which can catch the price, because if the price is able to break this zone, it means there's no more significant challenges. I mean, there are challenges, but not as significant as this zone. There was always a big battle when the price met with this zone, and we think it is highly possible that we cannot break just as easy as we thought. But at the same time, fingers crossed to Bitcoin, I really hope that we can start an actual new bull trend. Because the fact is that Bitcoin can be in a bull trend right above the zone, but cannot be in a bull trend below the zone. Ethereum, however, in a little bit easier situation because it's already over this zone, which is the red zone. But that doesn't mean that Ethereum is definitely in bull trend, because as we see, there was a couple of days the price tried to break back below. Of course, if the price building to the upside continues, which means we're going to get new higher highs in structures and new higher lows as well, we could successfully attack the zone between 2,172 and 2,325, and that would confirm some kind of positive bull trend for Ethereum as well. So very interesting times in the crypto market. But there is few more things I would like to highlight. First of all, last week the stock market wasn't really very good. As you can see, everything is bloody red. There was a couple of companies, especially from the health sector and health services, was pretty good, and commercial services was kind of mixed, but the rest of them was very, very negative. And maybe this is the first time where we see the tech sector for a whole week that much negative. But despite of this negativity, there was some kind of question about what happening in the EV market. Because we saw, for example, Lucid was trying to catch itself at the bottom, but it was completely unsuccessful. But at the same time, we saw EHang was very jumpy to the upside, Li was very jumpy to the upside, and Tesla also is very positive. Now, what happened is that Rivian is actually joining to Ford and GM that they will rely on Tesla superchargers and chargers. Therefore, Tesla obviously went higher, way higher, meeting with the 265 level, which is actually a main target price for the option calls. But because we didn't close above, most of the option calls probably out of money already. But if I go down to 1 hour chart, I can easily see a forming head and shoulders, which could indicate some kind of correction all the way down to 232, which is a zone. But if I go back to the daily chart, I can clearly see that because we have a golden cross between the 250 EMA, which is the exponential moving average, I do expect a significant cycle close until 12th of July and probably a successful retest of the 50 or the 200 EMA. Mostly when golden cross or death cross occurs, the price is always retesting one of the two or both moving averages. And if this retest is successful, then swing traders can start thinking about the direction where we went. Obviously, this is a golden cross, so we're thinking about upside, not to the downside, but we need that successful retest. And the retest will be successful when the price in the decline, making a very well identified structure. The structure has an upward trend line which we need to identify in time. If we can break this trend line after we're bouncing off one of the two or both moving averages, then after the confirmed breakthrough, which is 2 healthy candle after the break, we can clearly say that the retest of the golden cross is successful and swing traders can enter with their best. So Tesla is something to watch, but I also urge everybody to watch natural gas as well. Because natural gas was opening its cycle on 29th of May. Or, well, a little bit later, that was a little bit of shift, but it was pretty exact. The price is still building to the upside, means we always have higher low and higher high without breaking. And that's the first good news. The second good news is that we're already above the 50 EMA. We in fact tried to retest the 50 EMA, but the scale EMAs, which is now 3 smaller EMA, represents so much momentum now on the gas that it was unable to touch the 50 EMA and was shoot out to the stars again. There is 2 main resistant lines what we have to watch in the upcoming days and weeks. One is the 3.163 resistant level, and the second one is actually a zone between 3.445 and 3.641. The 200 exponential moving average will indeed decline until this level and most probably trying to meet with the price somewhere at this point. So I think this could be a very, very good cycle all the way to 13th of September, which when we need to close. We do not know how strong the gas price could be, but I think it is not impossible to reach a $5 level-ish until the end of the year. We'll see that definitely. And I really hope that information was useful for you. Remember, at the pro level, we analyze every major macro data and draw the proper conclusions when they arrive. If you want to join, visit our website, link in the description. In the meantime, I would love to hear your thoughts and opinions in the comment section. If you want to stay informed about next week's data and other useful information, subscribe and turn on all notifications. And if you enjoyed the video, give us a thumbs up so it can reach more people. See you in the next video.